Welcome back. I'm Pratap here. Today is 20 March 2024. In this video, let us generate supply demand zone chain for NIFTY. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at the playlist supply demand zone price action course, and it is available at our NeoStock YouTube channel. Even I have provided the link to this playlist in this YouTube video description. Click the link, you will get into this page, and then scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time we release a new YouTube video, we will provide an update in that channel. Now let's get into analysis of Nifty 50 with the help of NeoStock software supply demand zone chain. Even before that, let us analyze the stock based on the supply demand zone chain generated in our yesterday's report, because we have drawn all these zones based on that. Look here, yesterday we have drawn a 25-minute supply zone. This is a normal supply zone, not high liquidity. Even 5-minute supply zone is also normal supply zone. Why we have shown some interest is some rejections from this zone. That's why we want to see what's really happening. Generally what we do, we plan our trade setups based on the high liquidity zones. But even though this is not a high liquidity zone, because of the price action clues, rejections, we had some interest. But what happened today? With a gap up, this zone is violated in the morning session itself. So we have to delete the first candle itself. It is violated with a gap up. After that, prices came down because at present supply is activated. And now prices entered into the daily demand zone, new daily demand zone. And here we have a 15 minutes high liquidity demand zone. So we are waiting for a trade in this zone. But slightly we missed it. Slightly. Even if you add the buffer, generally we use 0.1% as a buffer, maximum you can use. Even if you add the buffer slightly, maybe a 2 or 3 points difference, we miss this trade. And after that, prices moved and entered into the 5 minutes high liquidity supply zone. It went into the entry area. What is entry area? Just before the trade you can take. How much buffer you can add here? Again, 0.01%. That means 22 points you can add. But price reached close just 6 points before this. The only difference between this proximal line and the high of this value is only 6 points. Definitely you would have added some 20 points buffer. If not 20, if you feel risk is high, still you would have added 10 points buffer. So you would have got an entry. This entry you would have got, short entry. And moreover, this is a high liquidity zone, daily high liquidity zone. Inside the daily high liquidity zone, we have this 5 minutes high liquidity zone. Definitely you would have taken a short trade here. And after that, Nifty has given 110 points move up to here. During the intraday, up to here, it has given 110 points move. Why I am saying up to here? Because this is at 2 o'clock 30 minutes candle. Most probably last 1 hour or last 45 minutes, you will close your trades. So that's why I calculated up to here, not up to here. This is at 3 o'clock candle. Up to here, it has given 110 points move. Definitely you would have captured some 100 points profit. This could have been your successful trade. But why we missed it? Actually, this is also could be your successful trade. If you would have looked into our softwares, supply demand zone chain, I am showing you every day. We have a zone here, low priority high liquidity zone. The TCO underscore or TCZ underscore DZ. Those two are low priority high liquidity zones. Here we have a zone. I will show you in the 5 minutes time frame. This is the zone, low priority zone. And in this zone, if you would have taken a trade, you would have got 220 points move. This is a high liquidity zone. We didn't draw, but I am showing you the low priority zones from our reports every day. Even yesterday report also, you would have seen this. Let me show you. The 5 minutes time frame. Let me generate the chain. It is okay, we got it. So here we have a demand zone. This is the one, TCZ underscore DZ. This is a low priority high liquidity demand zone. It gave a test today, but also it is pierced today. Slightly it is pierced, that we will discuss. It gave a trade. So when it is a 14th February at 1410 candle, leg in. See here, 14th February, 1410 leg in, we have a base and we have a rally. This is identified by our software. But we didn't draw, we have drawn only high priority, high liquidity zones. But you would have looked into this zone from our report. And this low priority high liquidity zone holded the prices. It did not allow the price to reach to this 15 minutes high liquidity zone. And which time frame it is? 5 minutes. This is the reason behind that entire move. Because prices entered into the daily demand zone. Because the demand zone is the area where we have institutional buy orders. So definitely by the time prices entered here, the existing supply, this zone has consumed, because prices are coming from supply. Supply is very strong now. But even then, demand, definitely institutional buy orders will be there. And moreover, this is a high liquidity zone. But it is a low, within different categories of high liquidity zones, this is a low priority. But still, this is having a better strength than normal demand and supply zones. That way it holded the prices. Slightly it pierced. It is within our stop loss buffer. Stop loss buffer. And you know, every day we are generating stop loss buffers in case this is a useful information to you. Every day we are generating stop loss buffers from our software. See here, let me show you. Stop loss buffers I explained in the recent training lesson. Based on ATR we calculate. See here, if you get into this page, here Nifty 50, you have Nifty Bank. For all the indices you have available. Those who are trading Nifty 50 or Nifty Bank or Nifty Financial Services or Nifty Mid Cap Select. Today we got excellent trade in this zone. Nifty Mid Cap Select. It gave nearly 8.5% ROI it has given during intraday for as per one futures lot size. If you are option trader, you would have got even more profit. But anyway, see, look into this. So 6.99 is the stop buffer. Those money points, that means 7 points. See here. What is the distal line value here? 21. Approximately. 21,713. And what is the low of this candle? 21,730. 0.70. So how much? This is 7 values. So definitely it is within your stop buffer area. 21,713. Where exactly it went today? Low. Low is 21,710. If you add that 7 values, it is 21,717. But the low of this zone is 21,713. That means we are within the stop loss buffer. Your trade would have been saved. So every day please refer these stop loss buffers. And where these values are available, every day we are publishing 3 videos. One is stocks near demand and supply zones. Second one is weekly income trade and monthly income trade video. And third one we started from 2 days back, from Monday onwards. We've been publishing a video for short-term income trades. That is daily income trade and hourly income trade. Hourly income trade is for intraday traders. So these are the 3 reports, 3 different videos we are publishing every day. Each video, at the end of the video, I am publishing the stop loss buffers every day. So any one of those videos you can enter and you can get your stop loss buffer values. So that is what I suggest you. See, today stop loss buffer saved us. Let me tell you, if stop loss buffer, if you want to calculate, how you will do? Take a calculator and take the low of this zone. What is the low of this zone? Here, go to the candle. Exact value for calculation I am showing you. In case if you are, maybe you are having familiar, but safe side, let me show you. Anyway, we have to draw stop buffer here. The low of this candle, this is zone low. The low of this candle is 21,713.45. 21,713.45. Let me check again. 21,713.45. Okay, because this is a demand zone. Demand zone you need to subtract. Supply zone you need to add. So here 21,713.45. What is the stop buffer? 6.9. That means you need to round up the value to near. So when you round up, it is 7. So minus 7. 21,706.45. Either you can take 21,706.5 or you can round up to 21,706, because stop buffer is the minimum value. Maximum, if you can bear the risk, you can increase for stop buffer further also. Okay, 21,706. Let me keep the round value. 21,706. Let me draw a horizontal line. Let me adjust the coordinated value. 21,706. Now this value is adjusted automatically. See here. Now within my stop loss buffer, how stop loss buffer saved our trade. Not only saved our trade, it gave you 220 points up to this high liquidity zone. 220 points move it has given from here to here. Maybe this, if you deduct this buffer, maybe it could be maybe 200 points, maybe plus 200 points plus move you would have got profit. Excellent move. 220 points profit during the intraday. Next again another 100 points profit you would have got from here to here. Swing traders would have holded this stock, or even short-term traders, DIT traders also would have holded, because currently Nifty is short trades are enabled, they are very strong, and moreover prices entered into high liquidity daily demand zone. So maybe DIT traders or maybe WIT traders definitely would have holded the trade. But already it gave 100 points profit today. So that's why I am recommending all the members, whoever is watching the Nifty, Bank Nifty videos, every day pick up the values from this list. You will be getting the calculated values. This is a 3% ATR you can use for your intraday 5-minute zones. And 5% ATR you can use it for 15-minute zones. 10% ATR is for 75 minutes or 125-minute zones. And 15% ATR is for you can use it for daily zones. That is your entry zones. 5% you can use it for 15-minute zone or even 25-minute zones also you can use. 3% ATR is for 3 minutes, even 5 minutes, or even you can use for 3-minute zones also you can use. If you maybe, or you can use a 2% ATR also for 3-minute zones. That is also allowed. If you feel 3% is high. Anyway, you have ATR value is here, daily ATR. You can calculate from here. So please remember, every day I am generating this information in the videos, stocks near demand and supply zones, or WIT and MIT report, or DIT and HIT report. Any one of these reports, at the end of the video, you can find this report. Please remember, because I can't explain this point every day. So this is about stop buffer, how it saved our trade. And this is a low priority high liquidity zone which is there in our report. 14th one in this, the 14th entry in this. We didn't draw because we are drawing only, I'm drawing only high liquidity zones. It doesn't mean low priority zones doesn't work. It worked today. How it helped you. So this is the reason why your trade was successful. But this is a pierced zone. So whoever took trade in this zone, definitely you would have got a good profit. The reason why I am telling you why this move, such a big move, because this move is from high liquidity zones. But this is low priority high liquidity zone. Not only that, another interesting point also there. Why such a big move? Because here, see here, drop, 2 base candles and rally. Institutions created a new zone. This new zone is also again high liquidity zone, but low priority high liquidity zone. That's why it got such a power. How it is low priority high liquidity zone? Once I'll show you in the reports, because we have to draw these zones. For today, at the time I will show you. Hope you got clarity. This is the analysis of what we identified from our yesterday's report. Always keep an eye. I am not drawing every zones. I am drawing only high liquidity zones, high priority high liquidity zones in the chart. But when I am showing these reports, you should also observe the remaining zones and you have to draw on the charts. You should not expect everything from me. Okay, fine. Now, any changes in the analysis? Yes, because this zone is pierced. It's not valid anymore. Anyway, we will be drawing a new zone here very soon. First, let us delete the unnecessary things. Unnecessary means the one that is violated or other things. And this 25-minute zone we drawn is for reference purpose we drawn yesterday. Do not forget, this is a normal 25-minute zone. It is not a high liquidity zone. If it is a high liquidity zone, it would have holded the prices. See how it holded 5 minutes high liquidity supply zone. Moreover, this 5 minutes high liquidity supply zone is very powerful because it is inside daily high liquidity supply zone. That point also you should not forget. Lot of supply is here. This is the supply. Pro gap area is there. Lot of supply will be there. And again we have 75-minute zones. Inside 75, 15 minutes high liquidity. Inside 15 minutes, 5 minutes high liquidity. All the zones are high liquidities are here. But before prices enter, first it has to cross this zone. After that pro gap area it has to cross. So you can't expect easily all these supplies will be violated just like that. Nifty will get a lot of resistance in this area. We can say this is a very strong resistance for this, probably for this entire week. This could be a strong resistance. Unless something drastically demand has increases, some extraordinary news came to the market, that way demand drastically increases and then in one shot all these things are violated. Except that is a rare situation. Forget about rare situations. Otherwise, it is not easy to break this supply. Now let's focus on the zones created today. The first zone created today is on 25 minutes time frame. Let me go to 25 minutes. Let me generate the chain. In 25 minutes time frame, one zone is created today. Demand zone, that is demand zone is created. So here, sixth entry. This is a low priority, high liquidity demand zone. Let us draw low priority zones also, because sometimes you are getting trades and you are missing them. See today, because we didn't draw, I don't know how many of you really observed and took a trade there. That's why keep an eye on all the remaining zones also. This is 20 March 2024, 10:05. Let me change the time frame to 25 minutes. So where is it? Here. 10 o'clock 5, these two, this is a base candle, this is a medium size candle. That's why it considered part of the zone, because already one base candle is here. Sorry. This is at 25 minutes. Let me add this is low priority. When I say low priority, don't underestimate these zones. Within the high liquidity, they are low priority, but they are powerful than normal demand zones and supply zones. And also do not forget, sometimes these low priority, high liquidity zones, later on, they will be converted to high priority zones. I shown you one example yesterday or day before yesterday analysis. I shown you one example how low priority is converted to high priority, high liquidity zone. HLQ demand zone, not supply zone. Which time frame? 25 minutes. That's it. This is the only one zone is created. Now let's go to 15 minutes time frame. Let us generate the chain, supply demand zone chain. Okay, what happened today in 15 minutes? Let us check. Here only one zone is created, that is 6th. This is a normal demand zone. But where it is created? Inside the low priority. So that way fine tuning this zone, it is helpful. We can fine tune. You are all aware of fine tuning the zone technique. It's a very important technique. If you want to take a trade in low priority, high liquidity zone, or even high priority, high liquidity zones, in the lower time frame, if you want to take a trade, you need to fine tune the zone. While fine tuning, if everything is perfect, if you find the order flow at 5 minutes, then only the high liquidity zone will work. Many times I told you, when a high liquidity zone, not only high liquidity zone, any zone will be violated. That's why in high liquidity zones, you cannot blindly take the trades. You have to fine tune. That is the work you have to do. Because every day, HLQ analysis videos, I've been teaching these concepts every day. Already, I provided you the complete knowledge through our training sessions, lesson 16. Apart from that, every day we've been discussing. If you are not listening everyday HLQ analysis videos, please start listening those videos. It will be helpful to you. It is not just about HLQ trades. It's about gaining the knowledge. So fine tuning the zone is very, very important. You have to do that. You can't expect me to do that. I'm showing you the main zones. higher time frames, inside lower time frame you have to fine tune. Please remember. And higher time frame, especially high liquidity zones will be violated easily. I repeat again, high liquidity zones, higher time frame, high liquidity zones. Higher time frame means above 5 minute zones. Maybe it could be 15 or 75 or daily. All these zones will be violated easily if the fine-tuned 5 minutes zone is not proper inside the high liquidity zone. 75 minutes or 15 minutes or daily zones. The proper fine-tuned 5 minute structure should be there. Otherwise the zone will be violated. We have seen several examples in daily HLQ zone analysis videos every day. Okay, now let's get and draw this zone. This is a 23 10:45, 15 minutes time frame. This is the one. So this is a zone, 15 minute zone inside low priority high liquidity zone. Okay, we got a zone here. This is the only one inside. Now let's go back and go to the 5 minutes. Let us generate the chain. Here few zones are high liquidity zones are here. Today high liquidity zone is created. This is the one, 12th one. Before we draw, there is one more demand zone is also created today. Apart from this, there is one more low priority also created today. So total 3 zones. But 13th one first we will see, because we are fine tuning. This is part of that zone. When it is 23, 2024 at 11:25. 11:25 candle, 5 minutes candle. Changing the time frame. This is the one, 11:25. Here you have here we have an order flow. Okay. This is just a demand zone, 5 minute demand zone, fine tuned. See, every day I can't show you these fine tuned things. You have to do this work. In this video, I am just showing you how to fine tune. Our software already gave. Without software also, you would have drawn this. We have a 25 minute zone. Inside 25, you have identified 15 minute zone. Inside 15, you have identified 5 minute zone. Generally, we don't fine tune in 25. In 75 minutes, we do. 75 minutes, 15 minutes, 5 minutes. But anyway, here you have order flow. And you have one more order flow in this zone. This is again a high liquidity zone. Low priority, but low priority. Especially when you have high liquidity zones, you need that they need not be fine tuned. High liquidity zones can be there directly. It need not be. Suppose I have 5 minutes high liquidity zone. That need not be inside a 15 minute zone. That need not be again inside 75 minute zone. But remember, if any high liquidity zone inside another high liquidity zone, then that is a very powerful high liquidity zone, the low priority. Let us assume I have a 5 minutes high liquidity zone. The 5 minutes high liquidity zone is inside daily high liquidity zone. You need not fine tune. The 5 minutes high liquidity zone itself is a very powerful. See, today we have seen this 5 minutes high liquidity zone is not inside 15 minutes, not again that inside 75 minutes. This is directly inside daily high liquidity zone. This is a daily high liquidity zone. This is not a fine tune. But what is the speciality? This is a high liquidity zone. Not only this is a high liquidity zone, this high liquidity zone is inside another high liquidity zone. That's why it is very powerful, super power. That is what happened. Just before entering itself, it pushed the prices down today. But anyway, we keep some entry buffers. That's why we are able to take entry and captured 100 points move during intraday. Okay, so here the last one. What is this? This is low priority, 5 minutes high liquidity zone. So low priority, 5 minutes high liquidity demand zone. That's it. Now, what is the range now? New range. Definitely the new range is between these levels. Now there is a fight between this high liquidity demand zone and this high liquidity demand zone. One of these levels has to be violated. Okay. Now you may ask a question, what about this zone? Yes, this zone also you can treat. This is in between. It doesn't mean they will be violated easily. First, the prices will be moving. If this is violated, this will hold the prices. This is the range we are. But what is the immediate range? From here to here. From here to here. Within the zone. Means like this. Let me draw. This is a info. This is info line, right? Like this. Initially, this is the range. And this is a 241 point range. And the next one is 321 point range. Probably the first fine-tuned 5 minute zone, at least one entry it may support. One entry it may support, but this is a low priority. I can't give much importance to this zone. Please remember, most of the times low priority high liquidity zones may give one successful test, but there are times they will also fail. Their success rate is not 80% success. High liquidity zones, high priority high liquidity zones are having 80% success rate. That is what we've been observing for the last 6 months. We have a consistent data for last 6 months. But the problem is low priority is not having a 80% success rate. Maybe they might be having 70% success rate, or even might be a little lower, 60% success rate might be there. But you can't compare low priority high liquidity zones with high priority. It may give you one trade, successful trade. Why? Because this low priority, inside again it is having another low priority 5 minutes high liquidity zone. May give one more test from here. If the first fine-tuned zone is, in case if the fine-tuned zone fails, maybe from the below it may pick up the orders and push, give one push. So maybe tomorrow this could be the range, or the next one this could be the range. In case if this 5 minutes high liquidity zone is violated, if due to any reason, because all of a sudden tomorrow market demand has become very strong, if this is in case, if this is violated, it's not easy, but we can't rule out any possibility, right? So probably Nifty will pick up the next short orders from this pro gap area, or this, because pro gap we never know how strong the order flow. Suppose if the orders are, let us assume the orders are weak in pro gap, then the next 5 minutes high liquidity. They are not easy to break. The reason is all are high liquidities. 5 minutes is high liquidity, 15 minutes is high liquidity, 75 minutes is high liquidity. Again this 75 minutes is inside daily, that is also high liquidity. You will see rarely such kind of scenarios. It's a rare scenario. All zones are high liquidity is a rare scenario. When you fine tune, while fine-tuning, all the zones are high liquidity is a rare scenario. That's why I am considering this as a superpower high liquidity zone. See, the example, just before entering itself, the prices, it gave a push. Your entry buffer, you would have saved you. Get an entry. Otherwise, if you are waiting prices to enter into this high liquidity zone, you might have missed a trade yesterday. I mean today. Okay, got it? Sorry. Okay, these are all the ranges. Please remember these ranges for our tomorrow's trade. Maybe today's trade might be right, but because the time is already changed by the time I am recording this video. Okay, so this is about NIFTY. Hope this analysis might be helpful to you so that you can further prepare your plans. So let's all meet again in our next video.